What's going on, guys? It's Andy here. Welcome back to the Andy Kandola Show. So, got a lot to cover in today's video. And oh man, has the stock market been volatile. Basically, with the stock market, it's been up and down in the last week. So, I want to go ahead and share with you guys some of the news and as far as what's going on in the market. Additionally, we're going to go ahead and go over why beginners lose money in the stock market. Now, there's many reasons why beginners unfortunately do lose money in the stock market, and I want to share with you guys some of the things that I've learned trading in the stock market for over 15 years now, so you don't make the same mistakes that I've made. As well as we will go ahead and run through my portfolio. Now, if you are new to my channel, my goal with this channel is to be fully transparent with you guys on a week-to-week basis and basically share my updates on my portfolio so you can go ahead and see what I'm doing, and hopefully there's some ideas in each video that you can go ahead and take away from my portfolio or just from the information that I'm sharing. As well as I want to go ahead and give you guys an update on what's going on in the market on any given week. But now let's go ahead and jump into the video. The first thing that I want to go ahead and share with you guys is basically my portfolio here. Now, my portfolio is a dividend-based portfolio, and if you're new to my channel, I basically focus on building an additional source of passive income with this portfolio. So all the stocks that I have in this portfolio are purely dividend-based, so they do pay me out dividends on a monthly, weekly, daily basis. And just a quick plug here, guys, if you are interested in M1 Finance, go ahead and check out my link in the description below where you can go ahead and get free $10 as well. But as far as my portfolio goes, it is currently sitting at $35,797. In the last day, I am up $350 in this portfolio. So that is really awesome that I am up in this portfolio because the market has been extremely volatile. In the last week, this portfolio is down $1,698. So I'm down about 5% in the last week. In the last month, we are up 8% roughly here, or $2,257. And in the last quarter, I'm up $2,056 or 11.55%. And then overall in the portfolio, it's basically sitting at the same thing because this portfolio I did start about 4 months ago now. Now, the other thing that I do want to point out here is my earnings from my dividends. Basically, so far, I've earned $154 in dividends. So that's extremely awesome. And I remember when I got my first dividend, I was so excited that I'm actually getting paid to own these companies and be a shareholder on these companies. And that is practically the main reason why I started this portfolio, is to build that additional source of passive income so I can retire early, or I can just use that money to buy other things that I want to buy. Now, let's go ahead and run through some of the purchases that I actually made in the last day. Now, just on the 15th, I did make 8 purchases because the market was down at the beginning of the week, but then it started climbing back up. But I did purchase 8 companies, and the 8 companies that I purchased, I already have investments in, so I just dollar cost average and I just added on to those investments. But the companies I purchased is United Health Group, O Realty Income Corporation, Johnson & Johnson, Microsoft, PPL Corporation, which is a utility company, PepsiCo, Aflac, and Main Street Capital. Now, these are the 8 purchases that I just recently made. Some of these stocks actually pay a pretty solid dividend, so my focus on this purchase was to invest in companies that are paying out a higher dividend, as well as I wanted to go ahead and invest a little bit more in the healthcare sector because that's a sector that's actually down a bit more than some of the other sectors right now. So these are basically the trades. Now, additionally, if we look at the dividends just in the last couple days here, on the 15th, I actually got paid a decent amount of dividends here. So if we look, O Realty Income Corporation, I got paid $10.53. Pembina Pipeline Corporation, I got paid $1.22. NextEra Energy, which is another utility company, I got paid $2.40. McDonald's, I got $3.06. Main Street Capital, not sure actually why this came in 3 separate deposits, but I got a total of, it looks like, about $2.18 or so. So these are just some of the dividends that I got paid in this portfolio. So I do like the idea of dividends in the portfolio because I'm not so focused on growth with these stocks and I primarily focus on the dividends. And now just a quick note, as far as this portfolio goes, I am thinking about actually starting a new series on this channel, which is basically going to be to go ahead and review different portfolios that are focused around a similar strategy or that are focused around dividends. So if you guys are interested in having me review your portfolio, I do have my email and my contact information in the description below. So if you want to go ahead and email me over your portfolio, I'll be happy to go ahead and review that. Just let me know a little bit more as far as what your goals are with your portfolio, so I can go ahead and give you guys my take on those stocks. But now let's go ahead and jump into as far as what's going on in the news before we go ahead and go to the main topic here. Now, as far as the market goes, at the end of last week, the market was actually starting to look like we were gonna get another second market crash because the cases for the coronavirus were actually starting to spike. And at this point, cases have spiked in China and the US, but the market is still starting to see a rebound. But here's my thing, guys. I always say that the market and the economy are two separate looking things. Basically, with the stock market, it's always future looking, and with the economy, it's always backwards looking. But as far as some of the cases in the US, this was a good analogy and a good chart to kind of show us where the spike is in the current spread of this virus. So if we can tell here, some of the states are actually starting to see a spike, which is scary because we don't want to be going in this direction. We need to start going in the opposite direction if the market's going to reopen and the stock market's going to rebound for the long term. But some of the scariest ones that I looked at was North Carolina and Texas. North Carolina cases are starting to climb up to about 800 cases, and with Texas, that's a bit scary because their cases are starting to climb over 2,000. So this is definitely not good news for the stock market, even though the stock market does look like it's starting to rebound at this point. Now, additionally, I did want to share with you guys an article that I seen from JPMorgan Chase. Now, JPMorgan Chase did say just in the last couple days that the dip is a good time for people to start buying into stocks. Basically, what they're saying is that they don't see another lockdown coming, and the risk of a second wave coming are quite low because at this point, we've actually understood how to go ahead and handle this type of virus. Yes, we don't have any kind of vaccine or the stock market would be climbing out the roof, but in general, I do believe that states are more aware of the precautions that they need to take, and a lot of states are doing it in stages, just like we are in New York. So that's just a takeaway in regards to this article. But now let's go ahead and jump into the main topic for this video, which is going to be the reasons why beginners lose money in the stock market. Now, I just want to tell you guys a little bit about me and a little bit about my story so you can put this in context. Now, I am going to share with you guys 8 reasons why I believe beginners lose money in the stock market. But as far as a little bit about myself, I've been investing in the stock market since I was 18, and that's over 15 years at this point. Now, I've done day trading, I've traded futures in the stock market, I've traded options in the stock market. Now, I've had some great days in the stock market, and I can tell you guys I've made a lot of money, but I've also lost a ton of money in the market as well. And one day, I've actually lost over $40,000 in the market. So what I'm going to share with you guys here is my investment advice as far as learning from my mistakes, so you guys don't make the same mistakes in the stock market. And to me, it's always important to learn from other people's mistakes, and hopefully you guys will get at least one thing out of this video. But now let's go ahead and jump into the 8 reasons why beginners lose money in the stock market. Now, the first one is gonna be get rich quick. Now, here's the thing. When you're investing in the stock market, everybody thinks that they can time the market perfectly. And the fear of not being able to time the market can make you feel like you could have earned more money because you could have timed the market better. But here's the thing. If any of us could predict the future, obviously we'd be billionaires at this point. So there is no such thing as a get rich quick type of scheme. If something is too good to be true, it always is too good to be true. So trying to think that you can outsmart the market and outsmart other experts that have been trading and that have been doing this and that do this all day long, every single day, it's just not gonna work. So timing the market is definitely a really bad idea. Now, my take on this is to always listen to experts and advisors and have some sort of strategy. Now, a great person to obviously look up to is going to be Warren Buffett. He is one of the richest people in the world, and his sound strategy, to me, based on value investing, is one of the best strategies out there. And now that's going to take me into my second reason, which is going to be to have a strategy. Now, basically, by having a strategy and by sticking to a strategy, you are disciplined. And discipline is huge when you're investing in the stock market. Now, just like I mentioned in my example, I lost a ton of money because I did not follow and stick with my strategy. Have an amount of money that you want to go ahead and invest in the stock market on any given day, week, or month, and stick with that. Stick by the rules that you create for yourself. Now, in the stock market, there's many different ways to invest. You can focus on value investing, which is basically Warren Buffett's strategy, where you focus on the value of the company and you focus on its profits and earnings. Now, my strategy has always been long-term investing, but in general, just have a strategy and stick with it. Whatever the goals are, make sure to write them down. Follow those principles every single day. Read them every single day before investing in the stock market. A lot of beginners tend to lose money because they don't follow their strategy. If there's something that you need to go ahead and edit in your strategy, it's not a bad thing to do that time to time. But stick to what you've learned and learn from those mistakes. And just like the famous saying goes from Warren Buffett, his rule number 1 is never to lose money, and rule number 2 is never forget rule number 1. But now let's go ahead and jump into the third tip and the third reason why investors lose money, which is gonna be to go ahead and invest with real money as opposed to paper money. Now, what I mean by this is it's never a bad idea to go ahead and start learning by trading paper money, but until you actually invest your own hard-earned money, your thinking is actually much different, because the way you think about investing with real money and the cautions that you take and just that internal feeling of losing that money, you're just going to be a bit more cautious, or you're just going to invest a bit differently. Now, I know in my take, when I was investing in paper money, I'm investing with like $1 million, but when I start trading with real money and I put even $1,000 in there, I'm not investing on that same level, and making a penny or making $10 is a huge deal, as opposed to investing with paper money where you're investing with so much money, but you're taking all these risks that you would never take if it was your actual own money. So, not to say that paper trading is always bad. Yes, learn the ins and outs of trading by paper trading, and there's many different platforms out there. One that I have actually used in the past is called Weibo, where they offer paper trading. I do have a link in the description if you're interested in that. But in general, when you are trading with real money, the decisions you make are usually much wiser. And additionally, just on this note here as well, is to only invest what you can lose. At the end of the day, you don't want to lose any sleep with your investments in the stock market. So if the investment is too much, or you're investing too much of your overall net worth, it's always a good idea to go ahead and reevaluate that, because you only want to invest what you're willing to lose in the stock market. But now let's go ahead and jump into the fourth reason. Now, the fourth reason why people lose money in the stock market is gonna be because you are following other people and you're not doing enough research. Now, I'm all about learning and watching other people so I can learn and get my takeaways from them. But by following somebody, and especially with some of these people on YouTube where they're trying to pitch you a course, or they're trying to sell you their charts or their program, by following somebody else, it's already too late, guys. It's too late to invest in the stock market at that point, because they've already caught on to the trend and they're doing this trade way beforehand. And when there's multiple people that are basically making a trade based on the same chart, the stock market is too smart from that, and there's people out there that are too smart that are going to take advantage of that. So just think about it like this: if there's 1,000 people that are following one particular chart and are trading on that same exact chart, it's going to basically trigger another investor to be like, hey, I can go ahead and short these guys, or I can go ahead and outsmart these guys. Now, I've learned from this in the past. I've followed other people and taking on somebody else's course. Yes, you'll learn something from that, but by using their same exact strategy, it's never a good idea. So always do your own research and don't invest in a particular company that you do not understand. It's very important to understand the business of an investment that you're making, because when you're investing in a particular stock, you're investing and you're a shareholder of that company, meaning that you're a part owner. So by owning a particular company, why would you want to go ahead and own a company that you have no idea or you don't understand? So it's very important to do your research on any particular stock, and that's basically gonna be tip number 4. But now just jumping into tip number 5. Tip number 5 is gonna be to use discipline and focus on consistency. Now, in my opinion, we all make this mistake. It's hard to stay consistent because life happens and there's many things in life that do change and make it very hard to be consistent. And just in reference to discipline, it's extremely hard to stay disciplined with a strategy because we see something new, or we're watching somebody on YouTube and basically their strategy seems like they're making more money than you're making. So you go ahead and start changing your strategy and you're not as disciplined because you're just making changes all the time. Discipline and consistency is one of the biggest keys to growth into making a ton of money in the stock market. Based on my experience, guys, my focus with investing has changed a lot throughout, but I've learned that discipline and consistency is one of the biggest takeaways to have wealth and to make a ton of money in the stock market. By sticking to what you've learned and what's working, keep investing by following that discipline, and if it's working, stick with it. Don't make changes. Now, with my strategy, I do focus on dollar cost averaging. Basically, by dollar cost averaging, I'm able to eliminate risks in the stock market. So that's one of the things that I use to focus on basically being consistent in the stock market. And when there's lows in the stock market, I'm able to buy at a lower price. When there's highs in the stock market, I'm still dollar cost averaging and investing. So that's just a consistent strategy that I've used in my experience. But if you're new to trading, start with investing with a small amount of money and then just grow that over time. But again, I can't emphasize to stick with a disciplined strategy and consistency. And now just jumping into the 6th reason, and the 6th reasoning is going to be overexposure in the stock market and not diversifying enough in the different sectors in the stock market. Now, by investing in just one particular stock, you're totally overexposing yourself where you can lose all your money in that one particular stock. And now what I think is one of the easiest ways to reduce your risk when you're investing in the stock market is going to be to diversify your investments. Now, within the S&P 500, there are 11 different sectors. Diversifying in all the sectors to me is probably one of the safest bets. But if you're not diversifying in all the sectors, even within one sector, let's just say it's the technology sector, diversify in multiple companies. So in case one of those companies takes a huge hit or goes bankrupt tomorrow, you're not losing all your money because you're diversified in multiple different companies. Now, here's the thing with this can obviously happen without even knowing, where we're just so caught up in one particular investment or one particular company. Now, in my case, I love Tesla and I started investing in Tesla, but I realized soon enough that, hey, in case something happens to Tesla, I can go ahead and lose all my money. So I started diversifying myself in other investments like Amazon, like a Facebook. So it's definitely worth to go ahead and diversify and not have all your eggs in one basket. Now, additionally, the 20% rule is what I use, where I don't want to invest in any one particular stock for over 20%. So I stick with that 20% rule, and that's something that I've always stuck by because I just want to be diversified. Plus, as a prime example of this, we're going through this right now where we are in the middle of this pandemic and the leisure and travel industry took a huge hit. Those stocks took at least a 50% plus hit, and some of those companies might actually be going bankrupt, like Hertz, for example. So that's another reason why you want to be diversified. And now moving along to the 7th reason. The 7th reason why people lose money and beginners lose money in the stock market is gonna be because they're holding on to their losses while they go ahead and take in the profit. Now, here's the takeaway from this, guys, is I've done this in the past myself, where I make money on a particular stock, so I go ahead and rush in and take my profits. But a stock that I'm losing money on, I'll go ahead and leave it in there because I want that stock to go ahead and start at least climbing back to breaking even, so I lose less money on it. But the polar opposite of that happens, where I lose more and more money, and now I'm stuck with a stock that I've lost so much money on. And at this point, I'm just waiting and holding on to the stock because I'm just hoping it rebounds. But at the end of the day, I have to look at this stock and look at this investment every single time I look at my portfolio. And ultimately, when I go ahead and sell it, I've lost an additional 20 to 50%, where I should have just sold it as soon as I knew the stock was basically not going to be climbing back anytime soon. So the important lesson with this is to go ahead and cut your losses as soon as possible, as soon as you basically know that the company is not going to be turning around or the strategy of that company changed. But now, just jumping into the eighth reason on the list is gonna be the lack of patience. Now, the lack of patience is something that I've gone through multiple times, and why I think beginners lose money, because they're just not staying patient and not sticking with their strategy. Now, emotions drive all our decisions. Basically, when we start seeing other people making more money because they're following a different strategy, we want to go ahead and change our strategy, and sometimes we're changing our strategy way too quick. Stick with it. Stick with the plan that you have in place. Now, there's many different ways to go ahead and trade in the stock market. Whatever you're following, stick with that strategy and have patience. Improve on that strategy, but have patience. But guys, these are gonna be the 8 reasons why I believe beginners lose money in the stock market. These are just things that I've learned, and some of the things that I know I can still improve upon, but are some of the things that I've just learned in my days of trading in the stock market. Now, of course, if you are new to my channel, make sure to subscribe to the channel down below, as I make videos all around making money in the stock market. And if you don't mind hitting that like button, as it really does help get this video in front of more people, and the YouTube algorithm loves that like button. But thank you guys for watching again. I will see you guys at the next one.